Be an expert with our how-to videos for real estate. Here's some tips on the loan process.
Hey guys, I'm Joe Massey, Senior Loan Officer with Castle & Cook Mortgage, and today we're going to be talking about HomePath financing. So HomePath, if you've spent any time on the MLS or doing any research, you've probably run across HomePath properties. HomePath is the trade name for Fannie Mae real estate owned properties that are now up for sale and have special financing available. So Fannie Mae, I'm sure you've heard that name, is the big mortgage giant who bundles and securitizes billions of dollars, and I guess trillions of dollars worth of loans here in the United States. And when they have foreclosures, they will often remarket the property or resell the property through their website, HomePathcom. Now, because Fannie Mae has already foreclosed on the property, they're really just interested in getting these homes sold and getting somebody in to start taking over the payments and making payments on these right away. So because of that, they offer special financing terms. So the biggest benefit right out of the gate is going to be minimum down payment. For a traditional HomePath mortgage, you can purchase a primary residence with as little as 3% down, a second home or an investment property with as little as 10% down. The next big benefit is no appraisal required. Fannie Mae has already foreclosed on the home, they're already familiar with the property, they're not going to require you to do another appraisal, which is going to save you anywhere from $400 to $500. The next big benefit is going to be no mortgage insurance. So a lot of guys call me, Joe, I don't want to pay any mortgage insurance, but I've only got 5% down. What can I do? And we'll talk about some options, and oftentimes HomePath will come up that you can put down as little as 3% and have no upfront and no monthly mortgage insurance. So it's really a great plan to help you purchase a property with as little extra costs as possible. Now, Fannie Mae Foreclosure sometimes might be in a little bit of rough shape. You might need to do a little work to it to fix it up. Other times, they have properties that they've actually gone in and fixed up. They work with Home Depot and other local contractors to go in and clean up the properties, put in new paint, new carpet, new appliances. So you'd be surprised. Sometimes you can find these and they're in really, really good shape. So where do you go to find these properties? Of course, they're going to be listed on the MLS and other real estate search sites that you can go to with your real estate agent. But the real source for HomePath properties is going to be HomePathcom. It's just like it sounds, HomePath.com. You can go out there and you can see what's listed in your area, what's under contract, and each website is actually going to specifically tell you per property what type of financing it qualifies for. Does it qualify for traditional HomePath financing, which is what we talked about, no appraisal, no mortgage insurance, or there's the HomePath Renovation Mortgage. Now this is also a good option, which is pretty neat, that you can use to purchase a property, and if it needs a little bit of work, you can finance up to $35,000 in repairs. Now if you watched our 203K video, you know that there are some challenges with rehab loans, and the HomePath is going to be very similar in the $35,000 budget, but there's going to be some big benefits that there is not necessarily an approved list of contractors. You can use pretty much any contractor as long as they're licensed, bonded, and insured. They've got to have a couple of letters of reference and really know what they're doing, but as long as they are, pro contractors, you can work with them. Also, the qualifying is going to be relatively easy in that you're going to go in, you're going to have your inspection, you're going to get your appraisal, and then we're going to move forward to closing in a very quick time frame. Because our company is a direct HomePath lender, we have access to the HomePath renovation funds, which can help investors and primary residence buyers purchase these properties and finance the renovation costs. There's going to be some specific requirements on your credit score, on your income, and we'll talk about those individually, but qualifying for a HomePath or HomePath renovation loan is very similar to any other conventional mortgage. HomePath is really a great option and can really, really help you if you don't have a big down payment. So I encourage you to take a look at it. One last thing I always want to point out, I get a lot of phone calls of folks calling me about home steps, and they say, Joe, I found this home steps property, I want to do that HomePath financing you were talking about. Well, it's important to realize it is actually two different programs. HomePath is for Fannie Mae properties. Home Steps is for Freddie Mac real estate owned properties. As of right now, they do not have any special financing available in Colorado. We don't know if that's going to come available. So when you see Home Steps, what you want to realize is that that is just a Freddie Mac foreclosure, and you will need to go through traditional financing routes on FHA or conventional in order to purchase that property. So I hope that helps shed a little bit of light on HomePath. Really encourage you guys to research it, give us a call. We do a lot of these, really beneficial. So thanks for stopping by, and we'll see you in the next video.